Happy Wednesday, everybody. Welcome to another episode of China Update, where we discuss leading political, economic, and geostrategic analysis on the world's number 2 economy. My name is Tony. We have a big episode today, many economic and financial stories, especially with the banking sector. So let's jump in. Souring consumer loans are fast becoming the newest headache for Chinese banks, already battered by the nation's prolonged property crisis, casting doubt on Beijing's push to boost household borrowing as a growth driver, and raising concerns of a wider banking crisis. An analysis of interim disclosures by Japanese financial media outlet Nikkei Asia published this week shows that non-performing personal loans at 45 listed banks climbed an incredible 12.3% in the first half of the year to 841 billion yuan. About $120 billion US. Those are non-performing loans, not total loans. That outpaced the overall rise in bad loans, which grew an already concerning 4.7% to 2.3 trillion yuan, and exceeded the 4.8% increase in soured property loans. The surge has been especially pronounced at China's largest state-owned lenders. Industrial and Commercial Bank of China, Agricultural Bank of China, and Bank of Communications each reported more than 20% jumps in bad retail loans, with ICBM's figure swelling to 123 billion yuan. China Construction Bank in China and Bank of China posted double-digit increases as well. This is not surprising. These major banks have been the ones that have been pushed by the government to extend loans based not on the credentials on those who are borrowing, but pushed and fueled by the desire to increase public consumption to fuel economic growth. Those proverbial chickens have come back to roost. Regular viewers of China Update will remember that this also comes as we get news that Beijing is now forcing big banks to extend massive loans to state-owned entities and local government financing vehicles to pay trillions in arrears to private sector firms, even though banks warn that many of these entities likely cannot pay them back. Analysts warn that the trend exposes a dangerous shift in lending dynamics. Quote, as more creditworthy customers refrain from increasing leverage, less creditworthy consumers remain as active borrowers, leading to higher asset risks for lenders, end quote, said Nicholas Zhu, a Moody's credit analyst. Non-mortgage consumer credit, particularly credit card debt, has been rising even as mortgage lending contracts under the housing downturn. The stress is eroding profitability. Postal Savings Bank of China, which has a large retail focus, reported retail NPLs, non-performing loans, rising over 10%, while interest income from such loans slumped nearly 13%, with net interest margins at record lows. Banks are being squeezed by both swelling bad debts and falling returns. In a more market economy, banks will typically only lend to more risky borrowers when there are higher returns. So even as non-performing loan rates increase, overall revenue could soften that blow. Because in China it has been lent based on policy direction, not market fundamentals, Chinese banks are getting the worst of both worlds. Beijing has rolled out an interest subsidy program for some consumer loans, with officials urging banks to increase credit supply and improve financial products. Yet lenders remain cautious, citing weak household incomes and repayment capacity as structural challenges. Some second and third tier banks, including Huaxia Bank and Bank of Tianjin, have also flagged sharp jumps in bad consumer loans, while a few institutions such as China Everbright Bank have managed to keep retail NPLs in check. Analysts caution that institutions heavily exposed to unsecured consumer credit face mounting risks in an economy where household finances appear increasingly fragile. Next up, China has announced it will no longer claim the special benefits afforded to developing nations at the World Trade Organization, WTO, removing a long-standing source of tension with Washington and potentially clearing the way for long-delayed reforms of the global trade body. Premier Li Qiang revealed the shift on yesterday in New York during a meeting on global development held on the sidelines of the United Nations General Assembly. According to state media and the WTO, Li pledged that Beijing will stop seeking new, quote, quote, special and differential, end quote, rights in current and future WTO negotiations. Quote, this is the result of many years of hard work, and I want to applaud China's leadership on this issue, end quote, the WTO Director General wrote on X yesterday. The move marks a significant symbolic concession. Since joining the WTO in 2001, Beijing has identified as the world's largest developing country, a designation that gave it advantages such as longer deadlines to implement agreements, safeguard mechanisms for its exporters, and technical support. Critics, especially the US, argued that China's position was inconsistent with its status as the world's second largest economy and a global manufacturing powerhouse. Wendy Cutler, a former US trade negotiator now at the Asia Society Policy Institute, welcomed the announcement but cautioned against overstating its impact. Quote, in light of the absence of a WTO negotiating agenda and the slow pace of its reform efforts, the announcement, while welcome, will have little practical effect, end quote, she said. Still, rhetorically at least, it could allow China to present itself as a defender of multilateralism at a time when the US has withheld WTO dues and blocked appointments to its dispute settlement body. The debate over China's developing status extends beyond trade. In climate talks, Beijing has used its designation to avoid contributing to the $100 billion annual fund pledged by advanced economies to help poorer nations adapt to global warming, a position sharply criticized by the US and Europe, who point out that not only is China the biggest emitter of CO2 today, but now, incredibly, has surpassed all of European pollution going back to the Industrial Revolution. For now, Beijing's move may ease friction in Geneva, but it also highlights the political balancing act of a nation that still describes itself as part of the global south, while competing head-to-head with developed economies on the world stage. Next up, Hong Kong's once blazing crypto boom is cooling fast as Beijing quietly reins in mainland enthusiasm for stablecoins and digital assets. After months in which Chinese internet giants, brokerages, and even state-owned banks rushed to apply for stablecoin licenses in Hong Kong, regulators in Beijing have told firms to scale back. The new message is blunt: cut exposure to offshore crypto assets, avoid speculative activity, and stop using Hong Kong as a backdoor. The policy shift follows a global reset. Washington's new legislation on stablecoins has driven scrutiny worldwide, prompting Hong Kong to draft its own rules earlier this year. Dozens of Chinese firms piled in, but by late summer the wave was ebbing. Mainland authorities soon signaled to participants that the risks were becoming too great. Internet platforms have been discouraged from touching Bitcoin, Ether, or Tether, while state-owned banks have been told to wait on license applications. Brokerages are facing tougher restrictions too, with regulators halting the tokenizations of mainland assets for offshore fundraising, a practice that has surged this year through so-called real-world asset RWA issuances. The concern is systemic risk. Pegging mainland institutions to dollar-backed stablecoins or unanchored tokens could create dependencies that run counter to Beijing's agenda of promoting the digital yuan. Quote, decentralized crypto is by nature about dispersing control and resources, end quote. One industry insider told Chinese financial media outlet Caixin, adding, quote, in China's financial system, where resources already feel limited, the risks look uncontrollable, end quote. Other fads are also being stamped out. Hong Kong listed firms that touted crypto hoards, treasuries packed with Bitcoin and Ether, are under new pressure. Regulators fear that without steady business income, such companies rely too heavily on market hype. Brokerages that once helped mainland clients skirt rules to trade offshore are also facing renewed crackdowns. Compliance gaps, including easy onboarding through Hong Kong addresses, are closing fast. Hong Kong's stablecoin regime, launched in August, still promises a handful of licenses, yet enthusiasm from Chinese institutions is waning as policymakers prioritize control. For many in Beijing, the path forward is not crypto, but rather the digital yuan. Now, we have one more development to cover, but just quickly, if you're getting some value from today's episode of China Update and you'd like to support independent channels like this, consider subscribing, liking, and sharing. These are all tremendous helps. For some reason, YouTube has not been very hot on this channel for the last 2 months. Subscriber and impressions have collapsed. Hopefully that turns around. It is still a tremendous pleasure to present this every day for the regular China Update community, and I thank you for all your support during this tricky time. For those who'd like to go the the extra mile and help keep the channel financially sustainable, Patreon and Buy Me a Coffee links are in the description below. Thank you so much, everyone, for the incredible ongoing support. I couldn't do it without you. And finally for today, as we are a community of folks seeking a greater understanding of China, I thought it would be fitting to end today's video with this development. Jerome Cohen, widely regarded as the founding figure of US scholarship on Chinese law and a tireless advocate for human rights in the country, died this week on Monday at the age of 95. A professor emeritus at New York University and founding director of its US Asia Law Institute, Cohen spent more than 6 decades bridging East and West through law, diplomacy, and mentorship. Cohen's decision to specialize in Chinese law in 1960 baffled colleagues at the time. Fresh from Yale Law School and Supreme Court clerkships, he appeared destined for a conventional career in constitutional law. Instead, he began studying Mandarin and focused on a country that Americans could not even visit at the time. Quote, "The big gamble was, would we ever have good relations with China?" End quote, he later recalled. When ties thawed in the late 1970s, Cohen was uniquely positioned. By 1979, he was lecturing officials in Beijing and advising multinational corporations just as China reopened to the world. With his trademark bow ties and courteous style, Cohen pressed Chinese leaders to strengthen their legal systems, insisting they follow their own criminal procedure. He became the first American lawyer to practice in Beijing, navigating cases where foreign executives clashed with opaque Chinese rules. Beyond his scholarship and legal practice, Cohen was a steadfast defender of rights lawyers and political detainees. In 2012, he played a key role in resolving the diplomatic standoff over blind activist Chen Guangcheng, helping broker his move to New York University as a face-saving solution for both Washington and Beijing. Over his long career at Berkeley, Harvard, and New York University, Cohen trained generations of scholars and lawyers, many of whom carried forward his dual commitment to academic rigor and public advocacy. He published prolifically, warning of China's legal shortcomings, and more recently critiquing tightening authoritarianism under Xi Jinping. Reflecting on decades of US-China engagement, Cohen remained cautiously hopeful, observing back in 2024, quote, "Nothing stands still for long. We may be in a period of transition without even knowing it." End quote. Jerome Cohen is survived by his family, his scholarship, and the countless students and colleagues who saw him as a mentor, model, and moral compass. Okay, that is today's episode of China Update. Thank you so much, everybody, for watching. Have a good Wednesday, and I hope to see you for the next episode, which will either be tomorrow or on Friday.